If you're trying to decide between Plus500 and CommSec, you're not alone. Both platforms are well known, but they serve very different purposes in the trading world. Let's break down what each one offers, their strengths, and where they might fall short, so you can figure out which is the right fit for you. First up, let's talk about Plus500. Plus500 is a global CFD broker, and its main appeal is simplicity. The platform is designed to be intuitive and beginner-friendly, making it easy to trade a wide range of markets: forex, indices, commodities, ETFs, cryptocurrencies, and shares, all through CFDs. That means you're not owning the underlying assets, but rather trading on their price movements. Plus500 also provides useful risk management tools like guaranteed stop-loss orders, which can help protect against sudden market volatility. For someone who wants a straightforward entry into CFD trading with minimal complexity, Plus500 is a good option. But there are trade-offs. Because Plus500 is focused purely on CFDs, you won't get access to actual share ownership or dividends, and the platform lacks the advanced research tools, in-depth analysis, and broader account types we find with more traditional brokers. It's ideal for short-term traders who value speed and simplicity, but not for long-term investors building a portfolio. Now let's turn to CommSec. CommSec is Australia's largest online stockbroker, and it's designed for investors who want direct ownership of shares and long-term exposure to the market. With CommSec, you can buy and sell ASX-listed shares, ETFs, and even access international stocks. Unlike Plus500, when you buy shares here, you actually own them, so you can collect dividends, exercise voting rights, and build a traditional investment portfolio. CommSec also offers solid research tools, detailed company reports, and educational resources, which makes it appealing for investors who want to make informed, long-term decisions. Where CommSec shines is in its reputation, security, and the fact that it's backed by the Commonwealth Bank of Australia. It's widely trusted, and for many Australians, it's the go-to platform for serious investing. However, the trade-off is that CommSec can be more expensive than newer, low-cost brokers. Brokerage fees, especially for smaller trades, are relatively high compared to CFD platforms like Plus500. So, which one should you choose? If you're a trader who wants to speculate on price movements across global markets with a simple and easy-to-use platform, Plus500 might be the better fit. But if your goal is to build a long-term investment portfolio, actually own shares, and tap into the Australian and international stock markets with the backing of a major bank, CommSec is the clear choice. In short, Plus500 is for short-term CFD trading and simplicity, while CommSec is for long-term investing and real share ownership. Both are strong platforms, but your choice really depends on whether you want to trade price movements or invest in assets you can truly own. Well, that's all for this video. I hope you found this video helpful. And if you did, make sure you give this video a super thanks by clicking on the heart icon to help support the channel, and don't forget to hit the subscribe button. We'll see you in the next one.